Okay guys, so I would like to run through a financial statements of sole proprietorship in this video. I'll be using the MOE workbook, page 175, question 2. The company name is known as Eastern Trading. Okay, this question is suitable for set 3s as well as set 4s. So if you are weak in financial statements, have a look at this video. So in this part 1 of the video, what I'll be running through will be the adjustments to the 4 additional information in this question. Okay. Part 2, what I will be presenting would be the statement of financial performance as well as the position. Without further ado, let's move on to the point 1. Okay, so let me read to you point 1. Okay, depreciation on non-current assets are based on the following methods. Equipment and motor vehicle are to be depreciated at 10% per annum using reducing balance method, and fixtures and fittings are to be depreciated using straight line method over useful life of 5 years. Estimated scrap is 1,800. Now, before you start on depreciation adjustments, you need to remember the formulas. Reducing balance method is cost minus accumulative times percentage. Straight line method is cost minus scrap over useful life. Now, I know there's another formula to straight line method, but since they are giving us useful life, we will have to use this formula. So if we put the numbers in for equipment based on reducing balance method, it will be 60,000 minus 0, because based on the question, there is no accumulated dip yet. So we will have a depreciation for equipment, $6,000. Motor vehicle, same. There's no accumulated depreciation for motor vehicle in the question. So we will take 78,000 minus 0 times 10%, which gives us 7,008. Now, fixtures and fittings based on straight line method will be cost, which is 16,800 minus scrap 1,008 divided by 5 years. It gives us 3,000. Always now remember this very important point. Whenever there's depreciation, all you have to do is open up a new account, depreciation of whatever that non-current asset is, and put in the depreciation amount in there. So let me show you what I mean. For depreciation of equipment, you just have to add depreciation 6,000. Okay, so you open a new account called depreciation of equipment 6,000 and add into accumulated dip of equipment 6,000. Now in this case, because we don't have accumulative account, we will so-called have to open up a new account. So all you have to do is just remember, whenever you have depreciation, add into depreciation, add into accumulative once you get the correct number. Okay, moving on to point 2. Let me read to you again. A review of the trade receivable found that 5% of the balances may not be collectible. Okay, so let me introduce to you this formula that I have developed for my students. Okay, I call this the final allowance minus beginning allowance plus all write-off. Now, this formula allows you to find the adjustment, financial year-end adjustment based on the review percentage. Okay, so it handles this so-called review of trade receivable adjustments very well. So how do we do that? Once we get this calculated based on this formula, if this is a positive, all you have to simply do is add into impairment loss on trade receivable and add into allowances. Okay, if it is a negative, all you have to do is minus impairment minus allowance. Now remember, when we minus impairment loss on trade receivable, it is what we know as a reversal of impairment loss on trade receivable. Now there will be a negative treatment in the less expenses account. This I will show in part 2 how it is to be presented. Okay, so now let's move on first. Let's calculate out the final allowance. Based on the question, it was stated that 5% of the trade receivable balance may not be collectible. So I will need to calculate out what is the final allowance based on the percentage, which is 5% times trade receivable equals to 5% times 35,200 based on the question. This gives me 1,760. That is to say my final allowance is 1,760. Okay. Applying my formula, final allowance minus beginning plus all write-off, I will get a positive 1,760. Remember, I said that when it's a positive 1,760, all you have to do is just add into impairment loss on trade receivable, add into allowances. Okay, so this is the adjustments that you need to do. Now, you will notice that from point 1 to point 2, I have not been talking about debit or credits. Okay, because when it comes to financial statements, there's no need for you to know what debit and credit is all about. In fact, debit and if you have to go to the stage of doing debit and credits before doing the plus and minus adjustments to it, that will take up more time in exam, during exam setting. Okay, so that is why my teaching on adjustments for financial statement adjustments is just simply plus minus what do you have to do for it. Okay, now moving on to point 3. Rental expense of 4,600 was owing on 31st December 20x4. So based on the timeline, you can see that end of financial year was 31st December 20x4. 4,600 was owing, meaning to say it was used but not yet paid. So in this case, since it was used, we would have add into rental expense. And since we have an owing, you guys will know that there's this rent expense payable account, which represents owing. We will need to add the 4,600 into it. Okay, so we have our adjustments as add rental expense and add rental expense payable as 4,600. Moving on to point 4. Prepaid utilities expense on 31st December 20x4 was $500. Same goes, the financial year end 31st December 20x4, $500 being prepaid means that it had been paid but not yet used. Since we have not used it, that will mean that we will deduct our utilities expense. Okay, expense account records how much we have used. So since we have not used it yet, we will deduct it off. Now, we do have a prepaid of 500. Therefore, we will need to add into this account called prepaid utilities expense. If the trial balances or the balances in the question doesn't show any of this account, you will have to open up this new account. Okay, so there you have it. These are all the adjustments that you should do for all the 4 additional information. So I'm done with part 1, which is the financial statement adjustments. In part 2 of the video, I will present to you the statement of financial performance and position for this particular question and to explain to you guys why is the answer presented in that way. Stay tuned for my part 2.